Welcome to this new video on my channel, and today I want to talk about how I miss on multiple five figures and even close up to six figures just because of a few personal mistakes I did. And I want to go over what I learned from it, so I definitely think that today's video is going to be really valuable. So I don't want to talk too much. Let's dive straight into it. We all know that we've been into a confirmed bear market since since the start of the this year, but in the bear market we're trending down, so we were expecting a higher low for a low low. That was already our expectational order flow. And if we drop lower and just follow our market structure, we put in like a naked low that I also went over my on my X profile. Just check the pinned post. But since then we were putting in like higher lows, just trending like up, higher highs, and then like the first signs of weakness. I mean, you could kind of go back to like here, but it's a little different just based on the context. You can see that here we are way closer to our initial low compared to here, where we are already sorry, retracing into our high time frame supply. So um, there were a few differences, but I don't want to talk too much about that now. But basically, our main mark structure was our 3-day structure, and we started working it here. And that's actually a really significant point because we all know to confirm the higher time frame mark structure, we have to break the structure on the lower time frame. And if this is like our primary structure, this is our secondary structure. Damn, my English. And here was the first time we worked it. And to confirm an SFP, like it was not a break, it was just SFP. And to confirm it, we have to break structure back to bullish. So to confirm this wick, we would have to break this high. However, that never happened. So it's kind of stupid to expect a rotation back to these highs just because we wicked this low. However, we didn't even break this high. So that's like the first mistake that I'm going to go over in a second that I personally made. But yeah, let's drop even lower. So we all know now that we wicked this low and our higher time frame expectation is to go lower. So this is kind of our first sign of weakness. And if we didn't break bullish, what is the second thing that can happen? We can break bearish. And that's exactly what happened around here. We put in a Wyckoff Model 1 distribution, putting a high, working it, and then breaking structure around here. And this was basically our key point where all the shorts on the charts became high probability because we didn't manage to break back to bullish. And here we already like wicked the low. So instead of getting signs of bullish continuation, we're now getting bearish signs of weakness. And after breaking this low, we are just confirming the rotation to the downside. Like our first target is this low, so you would basically short Bitcoin based on a higher time frame expectation. You would short Bitcoin around here. I mean, let's do it correct. Let's check on what time frame the structure is valid on. I think it was the 2-hour time frame. Yeah, looks like it. So we broke it around. This is not a great break around here. So broke our structure around here, and it would basically show it around here, and you can target all the way down to this low, and eventually, because it's such a good entry, you could even target it to lower price levels. So yeah, that was basically the best shot you could have taken based on, I mean, it's basically just mark structure, knowing your level 1 structure this, and then just shorting it on your level 2 structure break. And yeah, the rest is basically history. So, where did I make the mistake? Basically, I kind of fucked off around here because as you guys can see, we had like these more or less equal highs. It's like a biside trail located around the high, and also we didn't really deviate any previous highs. And I was I was prepared because I was looking at previous pivot highs and lows and was just checking how did we top in the past to be like prepared for this high. And as you guys can see, most of the times, I mean, basically every time we like deviated a main high or a main low, and then we dumped or went higher. You can see here the way the low went higher, here the way the high went lower, and then the all-time high, we took the high again, went low. And it's basically the same scenario every time, like here, again, again. So I was kind of thinking that, yeah, look, we didn't even grab any main highs. The only time we did that was around here, but we continued to go higher. So that was like kind of a reason why I was thinking, okay, maybe we can go higher. And to back like this thesis of going higher, I was seeing like this buy side as a magnet to send us even higher. And also, a third mistake was, I mean, I'm taking full responsibility for this, but I was seeing like a few really good traders calling for higher just because of this buy side liquidity as well, and also like of time pivots and all that. But I kind of let myself like get influenced by others instead of listening to myself. I don't want to blame anyone. I'm pressing the buttons myself. Nobody's pressing buttons for myself. Nobody's feeding myself. Nobody's getting money for me. So it was my own mistake. I should have listened to myself. That's why I took like a few measurements after that to more or less cut a few people out and just focus on my own stuff because I learned a lot over these last 2 years and I just have to trust more myself. So yeah, basically because I was more or less expecting higher and I also wasn't really positioned in any shorts around here, that looking back, I mean, you couldn't really take any high probability shots around here. The time where you could like really size up was around here when we broke like, I mean, we SFP'd, but then we confirmed our bearish rotation on this low time frame. This was the time where you could have sized up. And maybe some people are saying, oh, what if we go higher now? I don't know. Okay, so let's say I don't know, you took like a 3 to 5% risk that would be really valid, and we ended up going higher. Let's say we broke up here. Then what would happen? We would break this structure back to bullish. This would confirm this SFP. And we would really likely rotate back to these highs. And what would happen then? What happened in the past? We leave it out our main high. So you would just reshort around here. Like we would get this, get our low time frame structure break around here, and reshort again 3 to 5%. And that was kind of like a stupid mistake I made. I was hoping for higher instead of trading what the market really offered me. Like the market like the market gave all the signs. Like we SFP this and then got our model 1 distribution around here and we dumped low. Like that was really all you needed. And basically what I learned from it was to first of all don't trade what I want, like don't trade our expectation, trade confirmations. And I was like only like more or less, I was pre-planning for both sides, but in the end I was more like hoping more for the bullish scenario. But yeah, I should have really just traded what the market offered to me, and that was basically like the main mistake that I made. That cost me a lot, and I wanna go over like why was it like why did I miss out on so much money? And it's basically because Bitcoin wasn't the only short that confirmed around this time. It was also render. I mean, I took render, but of course I didn't go in with a lot of money because I was hoping like to go higher again. Again, the mistake hope. You don't hope in these markets, but yeah, I already went over how I took this shot in a different video, so definitely check it out. But as you can see, we also had this atom shot really clean, like range deviation. I might do a video on that as well, but to sum it up, like we had all this cell side liquidity, like so clean. You guys can also see how quickly like we took that. I mean, we grinded up for how many days or how many weeks? 57 days. We grind up for 57 days and took all the lows in 10 days. So that's insane. But basically, to go over it, we range deviation is when you take the main high, like you deviate the main high, and then you go to a lower time frame. Here was a no, it was a 50-minute time frame. Um, you break the structure. And basically, that's the point where you go short. You enter here, put your stop loss above the high and above the high, and that's it. And why was it so high probability? Because again, Bitcoin, like at the same time, Bitcoin confirmed its rotation to the downside. I mean, you can put the times on it, like it was at 6 p.m. and render was at no, Atom was at surprisingly at okay, it was a little later. It was at 7 around 7 p.m. But yeah, that's basically what happens every time. Your PUMPFUN, I even shorted it, but I full TPTR what was really stupid in hindsight. Um, again, Model 1 distribution, Bitcoin confirmed around what like earlier, around this time, but I mean you get the idea. Bitcoin is like the main confluence. Bitcoin is like the king. Bitcoin controls all the coins. So I mean it's going over and over. Like we've had all this insane sales at liquidity. Like you guys can also see like how quickly we down lower. Like it was just a matter of time when we grabbed all these stop losses. But Wolf was also really clean. We had this Wake Model 2 distribution, and we were already expecting a rotation to the downside. And here we get our Model 1 distribution. Again, Bitcoin confirmed around 6 p.m. This was also when we got the break. I mean, we got the break a little later because we SFP the low, but your entry would have been around, let's say around here. I already marked it out perfectly, and you just target the low. So target the low for easy, and yeah, you can even hold down to this wick. What I would personally do if I was in this trade. However, yeah, um, that were like my personal mistakes, and I definitely like wrote it down in my journal because in trading, like it's try and error. Like you do all these mistakes, you fail over and over again, but it's not like an exam. It's not like in the school and the university, like at your job. Like it's good to fail. You learn from it. Like fail is something good. It's not like you fail your exam now, it's over for you. No, it's actually like the opposite. If you want to succeed quickly, you should make like twice as many mistakes as you can, like double your mistakes. However, like I'm don't want to say like only lose. Losing is good, but you also have to learn from your losses. Like it's not good. Many people like take trades, take trades, take trades, and they lose. But like just taking trades is not everything. Like you have to analyze what went wrong, what went right, and eventually, let's say I don't know, you lost this trade because you short it in discount, and you should losses trade as well because you short in discount. So you roll write down short and premium. That's what you put into your set of rules. Only short and premium. So you already got like one requirement set down for yourself, and you kind of just stack these how you call it, stack these different notes down, like what actually went wrong, what went right, and after that, like you build your own set of rules. You know what went wrong, what went right, and based off that, you can build like your own strategy. That's how you actually learn and grow. Because I don't know, I can give you a strategy, but it maybe works for me. For you, it doesn't work as well. Like everyone has their own preferences, everyone has their own systems, but yeah, to get back to the point in trading, it's really important to learn from your mistakes. It was a really costly, like I really missed out on a lot of money on this move. But yeah, hey, that's how you learn, and I learned my lesson now. It's not going to happen again. So yeah, I hope you guys could have learned something from this video. Um, and yeah, see you guys in the next one. Goodbye.